Oh, excuse me. Good morning, everyone. Welcome to our Thursday morning trading room. Bear with me here a moment. I am just going to get the screen share happening. My chart's just finishing loading. All right. Yesterday's session, very sideways for the most part. We saw, oh, come on here. My charts are not cooperating with me. 1 second. We saw a lot of ranges. Okay, hold on. Charts on my other monitor are misbehaving, so please bear with me here a moment. We're still trading within yesterday's trading range, however. Oh dear. That's what I get for playing with my charts beforehand. I think my computer is good due for a good scrubbing. I've got a lot of data here, seems to be. Oh, come on. All right. Won't play with anything else right now. I was just going to show you here that even though we've had some big ranges going on through the overnight and through yesterday, we really haven't gone anywhere. For by and large, we are trading still within yesterday's trading range, which it was a relatively bullish day. And you can see now we are up against that trend line here on the daily. Most of yesterday's bullishness actually came through the overnight session. The intraday itself remained relatively static. All right, let's put that away. Oh, here we go. I'm going to have to end up closing some windows here on my computer. It's it's really hanging up. All right, we'll just wait for it to finish. I got a few additional programs open as well, and that's probably slowing things down here. So bear with me just a moment. Come on. Good news is it looks like much of the trading is sideways, although we are getting a bit of a bullish break now. I apologize for my charts here. 1 second. I can't do anything right now because, well, I won't lock up the computer, but I'll just make things worse. Good thing it's opening range. I shouldn't be trading during opening range anyhow. Oh, come on, don't make me reboot the computer. Oh, Mark, crushing it this morning. He says, I've taken 5 contract trades this morning, a pre-market trade and a post-market trend change signal. And just to show you folks how those multiple orders add up, that's really the true secret sauce. Mark's up almost $2,700 this morning. Fantastic, Mark. Way to go. Mark and I had a great conversation yesterday. And, you know, it's, first off, hats off to Mark because he's really done, you know, the hard work. He's put in the screen time. He's learned how his system works. He doesn't chase a lot of signals around. He just trades the one signal. Well, essentially the one signal. I guess he trades a couple signals, but he uses his 3 birds. He focuses primarily on the Falcon for signal generation, but he's very choosy about his signals. Doesn't chase a whole lot of signals around. And unlike yours truly, Mark has the discipline to usually go all in, all out on a trade. All right. It can be done, folks. It can be done. It's, you know, it's not an easy business to learn, far from it. And we'll be the last to say that it's easy to do, but it can be done. All right, so we're getting had a little bit of a rally up. Let's take a look here what's been going on this morning. So here's the open, a little bit of a rally up. Where are we relative to yesterday? Looks like we're not too far off the overnight highs. Stuck around that 7,000 zone. That was a big number yesterday as well. Yeah, like Mark says, put in your time and you'll get your dime. And Mark, he made a good point yesterday. I know I focus a whole lot on the Raptor because I know most of the owners in the room are Raptor owners, but you DTS owners, you can remind me to show you signals on the other tools as well. Don't be shy about that. All right, so where are we now? We're about 15 minutes into the day. I've already been sitting out here for a little bit of opening range, and it looks like it may have been a decent morning to kind of be sitting on your hands. Decent follow through off that number one signal. Things may be trying to get a little bit more bullish here. Back now toward the low of the morning. That's that dotted line that you see there. A relatively tight little range for the most part. The hawk producing a macro pullback signal here that was spoiled by the yellow bar. And the Falcon here already starting with an early trend change signal. Now, when you're looking at these early trend change signals, this is essentially the same as a counter trend type move. So typically what I'll do is I won't go in very heavy in the trade. Now, you see here I've taken 2 contracts. So a lot of times I'll limit that to a single contract. The signal, however, spoiled now by the formation of the red bars. And you can see once again the danger with counter trend moves. Oh, the hawk here while we were looking elsewhere. The hawk developing a 4-arrow consolidation. Now the 4-arrow consolidation it's a with trend move in the hawk. It's essentially going to have, in this case, a bear flag type shape to it. Sometimes it will look like a bull flag, but essentially it's going to be like a bear flag. And you're going to get 4 signals, 1, 2, 3, 4. It's that 4th signal where we anticipate the market to move. And it's the only signal on the hawk that I will take off of yellow bars. All the other hawk signals I will avoid if there's a yellow bar in the mix. Oh, Okay, so what appeared to be a little bit of a bull push, maybe not so much. See, Mark says there were actually two back-to-back. Oh yeah, right here. So we have that one, 1, 2, 3, 4, 1, 2, 3, 4. And typically, like I say, oh, here's another one, 1, 2, 3, 4. Stop that. Very reliable signal for you hawk traders. Definitely one you want to keep a lookout for. And 69.60, I do believe that we're kind of getting close toward yesterday's lows. I think yesterday's lows were 69.50. Oh no, maybe they were lower than that. Hold on a second here. Where's my daily? So the yesterday's not overnight lows, but intraday lows, 69.33. So we got a little ways to go yet before we get that far. Okay, here now the trend change signal in the Falcon, possible trend change working there on the Hawk, maybe a little bit too quick there. The market's got a pretty good pace here this morning. Almost a little bit too brisk. Yeah, I don't blame you, Mark. Mark says, I'm going to send me picked up the Eagle Bounce for 18 ticks. That's when the Eagle band or the Raptor band gets very broad. Gets a little bit of a bottom going in and looking for a retrace back. There's my band counter. I should show that a little bit better. Okay, let's see if we can't pick something up here. Oh, here was a quick little late filter entry again on the Falcon. So the key components to the late filter entry signal, the filter goes out of sync, comes back into sync. The trend line itself never changing color, and that one running up there to its high probability profit target. And as it will often do in these types of trades, it will change direction after encountering the profit target. Okay, so here we've got a, oh, all right, here we'll deal with Antonio's question while we wait for the hard edge bounce. Antonio's asking, Eric, what does the band counter mean? One of our owners, Jim, discovered a while ago that as the band got very, very broad, it was more likely to reverse back to the hard edge. So the band counter calculates the distance from what we call the soft edge, that's this part right here, back to the hard edge, and it goes to the second hard edge, not the faster one, but to the slower cloud. What he discovered, and this will be unique for each market, so you're going to have to, I know you're following a lot of the Forex markets like the Euro-US pair. You'll want to start to pay attention and see when the market makes a reversal back toward the hard edge, how wide was your trading band? And what Jim found as far as the NASDAQ and the mini Dow were concerned, when you started to get certainly anywhere from 45 to 60 ticks, the band was very, very overbought or oversold, as the case may be. And Jim was actually very aggressive with it. He would start to short, in this case short, because we've got a bullish band. He would start to sell the first bearish bar. And he would try to trade it back toward the hard edge. If you're a little bit more conservative on it, you could wait for the first sell signal to print. But it's either way, it tends to be fairly reliable indicator of when the market is overbought or oversold and when it's likely to reverse. Mark, when you're doing it, because I don't think Scott's in the room here this morning again, but when you're doing it, do you, because I know you follow it, you and Scott both follow it here on the Eagle, and again, the Eagle and the Raptor shared the same band. I know you look for a bit of a double bottom to form, which is wise. Do you take the first bullish bar or do you take the first alert bar, the one with the warning dot? I know that you're still all in, all out on target, so you would take your 18 ticks. We'll just wait here while Mark types. But it's it tends to be fairly reliable. I know Scott was reporting to me he was having very good success with it. All right, maybe Mark went to grab himself a coffee, but or he's a hunt and peck typist. All right, so we're back now in the hard edge here on the Eagle and the Raptor. So we're going to anticipate a little bit of a reaction. Yeah, Mark says, yeah, I'm a hunt and peck guy. Okay, so what Mark and I'm assuming Scott have a tendency to do with this, Mark says it just happens in the Eagle where the band reversed around 59 ticks. I actually take it when it gets to that width and just punch in an order and then go all in, all out. All right, so very, very aggressive on that bandwidth indicator. I've demonstrated it here in the room, and I've tried both the short signal, the first short signal, and the first bear bar, or if we're looking for the reverse the other way, the first bull bar. And I've had pretty good success taking that first bar rather than waiting for the signal. It seemed to work reasonably well. We'll take a look here. The higher the value, the longer you hold out, the more reliable it will be. But Jim was starting to get, when he was following it, he would start to get really keen anytime the band got to be about 40 ticks broad. Good question, Antonio. Antonio is asking, is there anyone else in the room trading Forex or just me? We've got a smaller than usual crowd here this morning, but if there's anyone else trading the Forex, I promise I won't pick on you. If you wanted to just type in a yes, Antonio might welcome the company. I'm going to actually start paying a little bit more attention to the Forex markets. I know there's a lot of people interested in Forex. The NASDAQ's always kind of been my baby. I find the tick value is good, the volatility is there. I think it's just all around a great market for the little guy, the small trader. Well, it's been a very, very brisk morning here. All right, we're getting another number 3 signal. It's with trend. Oh, do I want to? We're kind of hit a little bit of a sideways skid, and we're producing a whole lot of sideways signals here. Let's see if I get a second push on that. Oh, looks like I shoulda, woulda, coulda. Don't know how many trick-or-treaters you guys had in your neighborhood. We took off to the pub and we just left the treats outside. And there were 2 treats left when I got home. Mike's asking about the Raptor filter. He's saying the Raptor filter is showing shorts only, right? With the Raptor filter, I'm a little less precise. When it was first developed, it was more of a confluence tool, but then we started looking at the signals and we were starting to get signals that would not be in sync with the filter. As a rule of thumb, it does show you the trend, but if you treat it more like a momentum style filter, I think it will serve you better. So what's happening is, obviously, we've got a huge block of selling, right? We had a huge block of buying. But what typically happens is what's happening right now. Notice how we had a little bit of buying pressure come through. Then we had some selling pressure come through relative to the sizes. Now look at this blue block relative to this red block. It's much larger, isn't it? So that tells me that the market momentum may be shifting to become a little bit more bullish. So if we get a buy signal off of this, okay, so now we're going to see if this red block that's forming will outweigh the blue block. And this isn't an exact science. You don't need to start, drawing lines across them and using them as a measuring stick. Yeah, I know. Mark says, wow, not a total clean out of the treats. That's the definition of Halloween integrity. Yeah, I put a sign out there, told them to treat themselves, but not to be too greedy about it. All right, so here again, they're fairly balanced. So the way I would look at this is that the sellers have balanced out the buyers. So right now it's a seller's market. Here come the buyers. And we'll see if the sellers, okay, it's starting to look like the sellers are stronger. So let's take a look at taking this signal right here, one of these discretionary signals. And we'll just pop that in because the filter now a little bit more bearish than bullish. And that's more the way I use the filter. You can see here the #1 signal printing on the blue filter. It would have worked out. You would have reached your profit objective. So I tend to use this more, like I say, as a momentum style filter rather than actually filtering the signals. So here now a #3 signal. Oh, moved a little bit quick. I couldn't get back to it. Mark says, and that worked. Yes, it worked. Trick-or-treaters in Wisconsin must be brutal. We don't get that many kids in our neighborhood. There were probably, based on the number of treats that we left outside, probably about 30 or 40 that came through. A few blocks away from us, however, our friends will routinely have 200 or more come to the door. And I spoke to a fellow yesterday. They will have 1,000 kids come to their door. Wow. All right, so we got a little bit of a Oh, I was going to call it a sideways trading range, and now we're breaking to the short side. I would have identified this as a trading range, I think. So now the breakout, the retest, we don't. So when we have trading ranges, or we think we have a trading range, we look for the breakout, we look for the retest, we want the retest to hold, we want evidence that the market can continue lower from here. It's okay if it slips in a little bit, but as it starts to get a little bit deeper, it negates the breakout. And this will be true for all your tools, folks. I'm showing it here to you on the Eagle, but it will work this way on all your tools. Okay, so now we have a green bar sell here on the Eagle. We got a second push, a relatively tight little trade that we could try. Here, let me clean this up. All right, it slipped me a tick. Don't know what's with all the slippage lately, but hooray! So a fairly straightforward trade and kind of combining the signals with the price activity on the chart. So just a review, because this one was almost textbook, really. And you could have framed your sideways range a couple of ways, actually. And let me show you the two versions. Actually, had I been paying closer attention, this would have made for a nicer trade. Had you framed your trading range this way, you would have witnessed the breakout to the upside and then the failure. The market could not recover. The market could not hold the breakout. If you see that, that is a very clear indication the market will go the other way. So you could have started shorting any of these sell signals. You could have sold this one, you could have sold this one, you could have sold this one, certainly any of these, even though they're inside the trading range. If you considered your trading range a little bit bigger, then when we see trading ranges, right? Oops, wrong tool. We're looking to see a breakout, we're looking to see a retest, and then ideally evidence that the market wants to stay out. It's okay if the market drifts into the trading range a little bit. I would usually say maybe the top quarter. The broader the range, the less the market should drift back into the trading range. The smaller or tighter the range, the deeper you can allow it to drift into the trading range. But when it starts to get somewhere near the halfway point, then I think you can safely assume the breakout is invalid. And in which case, if the market tried another breakout, I would look for another retest before trying to get in. This requires a lot of patience on your part, because we've all seen, even just a couple of days ago, how the market has the potential of making a really strong breakout move. And then, of course, you don't get the pullback sometimes for a half an hour or an hour. And meanwhile, you're kicking yourself because you missed that good move. But you shouldn't, because these types of breakouts where the market makes this enormous move are rare. Usually what happens is you get these tiny breakouts, the fake break, if you will. Where you have your trading range like this, the market pokes up a little bit only to reverse and stop you out. Now, there may have been enough, even in this breakout, to hit your profit target. But even so, it's a little easier on your nerves if you wait for the market to break, and then you look for the retest, and you look for evidence that it wants to head lower. So because I drew my trading range this way, I would accept a slightly deeper pullback if I consider my trading range to be here. I would not want to see it pull back too much further than this. But because it's the hard edge, because it's a breakout and a retest, you know, you got to be fluid. You got to go with what the market is doing. And then we come along and we produce a sell signal, and boom, down she goes. So a fairly textbook breakout trade. Oh, look at that. Now they've turned on their heels and gone the other way. Wow. And look at where we are. We're just shy of 7,000 again. Okay, so some very, very interesting moves there this morning. Now, if I were just starting out as a trader with a small account, that one trade would meet my trade quota. And I wouldn't risk trading anymore. I would call it a day. Because your objective as a small trader is to try to build your account to the point where you can start trading multiples. That's the secret sauce, folks. It's not chasing more signals around. It's finding those quality setups and then trying to take advantage of them. Excuse me. Sorry about that. And then capitalizing on those signals the best that you can. Mark says, kids love hitting my house on Halloween. I give out bags of cheese curds instead of candy. It is Wisconsin after all. I remember back in the day when you would actually get candy apple from people, or pomegranates, otherwise known as Halloween apples. And then some weirdos started putting razor blades and pins in the fruit. So if you didn't throw it out, you had to take it down to the hospital so they could x-ray it. Paul's asking, Eric, does indicator warehouse have a divergence indicator? There is, yes and no. There's divergence indicators built into some of the tools. Hold on a second here. I will show you. Let me see here. Where can I find it? I'll have to double check some of these before, like if you're interested, or you can research them yourselves. But if you go to the indicator warehouse page and you go here to the indicators, you can see the different indicators. A lot of these will have divergence settings. Bollinger Band Suites with divergence obviously has one. I do believe the which one is it here? I do believe the the ultimate moving average has, which one is it? It's one of these moving average ones also has a divergence to it. The Bollinger Band one does for sure, though. I know that. There it is. The trending volume with divergence has it, but as you can see, this is only Ninja 7 compatible right now. Good thing we got that moon phase indicator converted back to Ninja 8 though. But so short answer, yes, we have some divergence indicators, but not a specific divergence indicator. If you're interested in one though, I can certainly talk to the programmers about it. Divergence usually, well, it's relatively easy to spot. Well, it depends what it's diverging against, of course. So if you're following MACD or stochastics or something like that, RSI is a good one for divergence. But the Bollinger Band Suite is a very good piece of software if you're looking for something that has divergence along with multiple tools bundled with Bollinger Bands. It's a pretty good program. All right, let's see what we got going on here. So we keep making these little breakouts and channels. So there was a move higher, a channel, now a move lower again off this little breakout. Let's see if you highlighted your channel like that. Here's a little itty bitty breakout, a retest, and there's the sell signal. We should get one more retest. That one looks like it developed maybe fairly quickly. Yeah, Paul says, I find divergence to be a very reliable indicator. Some of the tools, like, here, let's just do a little review because some people may not understand what we're talking about with divergence. RSI tends to be a pretty good divergence type tool. Let's get RSI up here. And let's make it so we can see it. Okay, so we'll throw RSI on here. Just your stock RSI. And what divergence is when your indicator is going one way, but prices are going the other. The nice thing about RSI is it will tend to precede the market. So in other words, if you spot divergence in RSI, it will probably lead the market. It's not many leading style indicators, so it's nice when you discover something like that. Oh, here, let's do it this way. Okay, so normally, and this will be true for any indicator like this, stochastics, the AC accumulation, or sorry, the AD accumulation distribution, MACD, pretty much any type of oscillating indicator will show you this. And what you're looking for is you're looking for price and the indicator to go out of sync. So you would be looking, oh, here we go. We got some right here. So price is going down, but the indicator is going up. Well, that's a clear indication from RSI that prices should probably go up from there. So now that you assume prices are going up, you're going to be monitoring these swing lows and make sure that the swing lows are still heading higher. And there you go. That actually worked out pretty darn good that time. So like Paul said, it can be a very reliable indication confirming your signals. So you're just looking for the signals and your indicator to fall out of sync. Now, let me caution you. These things are all well and good. They all work until they don't work. There is no foolproof system in trading. Avoid the temptation to run down that rabbit hole where you spend all your time tweaking your system. Now, it's fun to play, it's fun to experiment. There's certainly a learning stage where you have to refine your system to the point where you're comfortable with it. Mark and I were talking about this yesterday. Here, by the way, is divergence again. Price is going up. The RSI is heading down. There comes a point in your learning phase when you're in sim where you are refining your system so that you are comfortable with it. But once you're comfortable with it, unless it's seriously broken, unless you're taking losing day after losing day after losing day, try not to tweak it too much, because it really is a rabbit hole that you may never emerge from. But the defining factor is always, does it help you make a trading decision? So if you're looking at RSI like this and you're saying, okay, I see divergence, I'm going to take the next sell signal. that helps you make a decision, then by all means, go ahead, leave it on there. So now we're waiting for the next sell signal. There it is. I'm going to short it. And regardless of whether or not this becomes a profitable trade, I was able to make a decision based on what my indicators, what my tools are telling me. And believe it or not, that is more important than whether or not this trade works out. It looks like it's going to work out. Come on, get down there. I think they slipped me again. Yes, they did. Oh, and I actually had 2 contracts in play there. So if they allow me to ride out the swing, maybe we'll go into parabolic mode. But like I said, avoid the temptation to overly tweak your system. You can end up with so many indicators. My goodness, I see some people's charts. They'll have RSI and MACD and stochastics and momentum and Bollinger Bands. All those indicators will tell you more or less the same thing. I can guarantee you if there was divergence here on RSI, well, here, we're waiting. Why don't I show you? If there's divergence on RSI, there will be divergence on MACD. What's another one here? Where's the... All right, well, here, let's just pull one here. All these indicators like awesome oscillator and what's that other one? The name escapes me right now. They're almost all derivatives of MACD. Okay, I should have highlighted the MACD a little bit better, but here's the awesome oscillator. You can see there's the divergence. Here's the MACD. Here's the divergence. And you can see it's all coming in the same place. All the indicators are showing you the same. So again, the key point is, does it help make a decision? Then, yep, keep it. Otherwise, get rid of it. This is the part that a lot of people struggle with. They don't realize, being able to make a decision is key. Observing market context is key. This was something we talked about yesterday as well. Mark says, I look at the hawk and the eagle to give me my context. I'll consider what's going on here, and then I'll look to the falcon for the signal. If you're just trading the raptor, it's the same thing. You got to look at the market context. Am I going up? Am I going down? Is the market sideways? To that end, sometimes it's helpful to have a daily chart, or you can even reference, like, let's say you want to reference a 15-minute chart. Here's a 15-minute chart. Here's yesterday's trading. Here's today's trading. Just to kind of give you a perspective of where you're at. This is all fine. This is good. You can do this. I know a couple people will run a bigger Raptor chart along with their trading Raptor chart. So they may have like a 20-tick Raptor chart to try to give them a little bit of more of an overview. And that's all okay. But remember, it has to help you make a decision, because just when you think you have your system tweaked, the market will untweak it for you. It always happens. Oh, way to go, Mark. Mark says, in the last 20 minutes, I've taken a 4-arrow hawk and a late filter entry in the Falcon, both in sim, but both working out for another $1,000. Well done. You know, folks, that's the other thing I can't stress enough. If you can do it in sim, you can do it in real life. The key is not to let your sim trading turn into a video game. When you're in the learning phase, go ahead. You know, treat it like a video game. Say, okay, here's the number 3 signal. I'm going to buy it. I'm going to see what happens. Right? So here's the number 3 signal. You look at it, you believe the market is emerging into an uptrend. Here's a sideways range. I'm going to try the number 3 signal. Okay, it worked out. If the signal failed, then you need to look and say, why did that signal not work out? What did I do wrong? What did I miss? It's a great learning opportunity. And you are always learning as a trader. I hope you enjoy learning because as a trader, you are constantly learning. And I do mean constantly. Mark says that I'll forever be able to hear your voice say, unless it helps you make a decision, you don't need it on your chart. One of my great Eric takeaways. One of my pearls I tossed before you guys. All right, here's our band counter again. Look, we're back up around 60 ticks. We've got some bearish bars here. I'm going to show you the more aggressive version of doing the band counter. Oh my goodness, we're getting slipped. I'm going to have to start using a stop limit order. Avoid some of this slippage. That one slipped me for a good 3 or 4 ticks. The problem with using the stop limit, of course, is if I only set a 1 tick, here I'll set a 2 tick slip, I may not get filled. So the band up here was about 60 ticks broad. This would have been your first bear bar. That would have been a very aggressive entry. We had the little bit of a second push opportunity here. That was the one that I tried. And you can see the market slipping and trying to back up on me. The dangers associated with that counter trend move. Usually with counter trend trading, I really recommend going all in, all out, because there is a good chance the market will try to resume the trend, just like what they're doing here. So let's see, if I had caught that earlier, See, this is what you do. Okay, so the trade did not work out. Why did it not work out? What did I do wrong? All right, maybe if I had caught it off that first signal bar, it would have gone down and hit my profit target. Yes, it would have. So you make a little note in your trading journal. I might have been better off taking the earlier, more aggressive entry. And here we go again. We had another one. The band was again probably about 50, 55 ticks broad. Here was another opportunity to short. All right, well, we're back near the highs of the day, and or the highs of the morning anyways. Highs of the day not getting all that much higher. So here's the new high of the day at 70.20. I do believe the high of opening range was around 70. Oh, there it is, 70.13.5. So we got a few ticks higher. And we're back toward the hard edge. The Hawk, very, very neutral right now, as is the Falcon, both a little bit of a mess here. Bit of a messed up number 2 signal. Okay, back to the hard edge. Let's see what we get in the way of a reaction now. The Hawk trying to do a first micro macro cross here, but quickly came back into yellow bars. Overall, it looks as though things are fairly neutral. The fact that this is where the market topped out earlier today, this is where the sellers hopped in. Where are they? There we go. So out of the open, we rallied up around this 7,000 area. And this is where the sellers started to push the market down. You know there's going to be some selling, even though we're above 7,000. You know there's going to be some selling here. How strong is the selling, though? That's the big question. Okay, cloud's starting to turn over. The hawk here definitely getting bearish. Possible, well, we already produced a trend change signal here in the Falcon. So here now on the Raptor, I would start to consider this an early trend change signal. So the cloud's not fully crossed over yet, but like 75, 80% there. We've had a little bit of a pullback. So those are the two components for a cloud crossover signal. Pardon me. So the next signal to short, even though it will be a discretionary signal, you could interpret as a early number one signal. Now, if this takes much longer to produce the signal, it will actually convert over into a proper cloud crossover. But I've set my system here to manual mode. I'm going to get ready now with an order to short. Just in case. And you can do a second push entry on this as well. You don't have to hurry into the trade. Oh, okay, maybe not. All right, so we're still a little stuck here, a little sideways. You can call your trading range something like that, I think. The fact that we broke here below the lows and then recovered does, in my mind, open up the opportunity maybe for a rally. All right. Oh, there was a number one signal. Let's see. Gonna get a second push, maybe. Come on. Maybe. This 7 whole area here from 710 to 720, a little bit sticky. You can see lots of trading, selling going back here again. Now they're trying to short it again from here, 70.15. And they did not slip me that time, but that's okay. I used the stop limit order. And let's see if we can get a little bit of follow through on that now. think I'm going to get a little bit more aggressive with my stops. I'll throw them here below 70.10. Got my fingers crossed, but the Geiger counter is starting to pull here to the short side. That's not good. If the buyers are going to recover, they're going to have to do it quick. Okay, there's a couple of bullish bars. I'll bring my break-even trigger down a little bit. No, they're not going to let me have this one. Oh, maybe they will. Come on, let's go. Give me another bar. I'll start rolling here bar for bar. Get up there. Oh, way to go, Paul. Paul knocking it out of the park here. He says, I took a long divergence trade on the YM for 134 ticks. Nicely done. Wow. Fantastic. Good job. Okay, so here the market not quite ready to break out of the trading range that we are in. In fact, I probably still draw it like this. So we're going to wait. We're going to see for it to break out. We're going to see whether the breakout holds. Given the uptrend coming into it, you probably favor a bullish break. Buyers will tend to be down here. Sellers will tend to be up here. So if you produce a buy signal off this bottom end, it may be worth trying a short-term buy. And if you produce a sell signal up here, it may be worth trying a short-term sell. Even though that trade did not work out for me, that's what I would consider a good loss. You know, I did everything correct. The trade just, it didn't work. Well, Paul, you're getting some congratulations here from other folks in the room. That's well done. That's a good move, man, to hold on for 134 ticks. Not easy to do. Okay, so here now the bullish break. Quick little retest. And we'll see whether the buyers are able to muster a rally. This would be, like I say, fairly quick. If they fail and the market trickles back here, it's almost certain it will try to test the bottom end of the trading range. Almost certain. In fact, what you could do, since we're looking for this breakout to hold, you could even just throw an order above there and just leave it and wait. Okay. But it does appear as though, see how we've drifted back toward the middle? We're kind of back toward the middle of the trading range. There is still hope for recovery. We are back to the hard edge. But if we get any lower than this, you could probably start selling. You could probably take any old sell signal, actually. Okay, so there's the crossover buy. I will just get ready for the next short signal, because if this whole rally attempt fails, like I said, there's a very good chance the market will try to retest the bottom end of this trading range. Oh, okay, so here's my sell signal. I'm just gonna take that. I love what Paul wrote here too. Paul said the divergence trade had three things going for it. It was off the secondary support blue line, and it had whole numbers and divergence. You know, when you start to trade more, you're going to find that those signals that have a lot of things going for it, a lot of confluence, are going to be the ones that work out the best. I think Mark and I talked about that yesterday as well, how he finds that when there's a lot of things in sync, those are the signals, those are the trades that you can take with more confidence. I always say that you should have at least two reasons for taking a trade. You know, if you can't figure out two reasons for taking the signal, then you should probably not. Well, there we go. There's a nice little two-reason trade that we kind of saw coming. Again, based a little bit more maybe on the context, the market context. So we saw the breakout. We saw the inability of the buyers to hold the breakout. So we sold it. Took the next sell signal. It will probably continue lower from here as well, but as we get lower, we start to run into the buyers again. I feel much better about today. This is a more typical day. The last couple of days, the market was bouncing me around a bit. But today things seem to be back to normal. I'm using air quotes when I say normal. But a fairly decent day overall. And things, I would agree. I think things are looking a little bit more bearish now. Here, the Geiger counter pulling hard over. As we head back toward the 7,000 zone. And are we back toward the bottom end of our trading range yet? Oh, we are too. Okay, so same thing in reverse now. We're going to look for the breakout. We're going to see how the retest happens. And some people will draw their trading range with the bottom right here instead of down here. I don't think it makes that much of a difference really. What we're looking for is we're looking for a bullish reaction. Then we're looking for the bears to step up and start selling the market again. And if they can do that, then I think there's a good chance the market will try to head lower. All right, so far they're holding the bottom end of the trading range. I don't think I'd like to see them get too much deeper than this, although I would consider a move back to the hard edge and a short from there, a weaker indication that maybe the sellers are going to try. Usually we expect the sellers to step up a little bit early on a breakout attempt. And once again, once you see the breakout and you're waiting for the retest and the market to resume the trend, you could just throw an order below there. You could just park an order there and say, all right, go ahead. If you come down, I am ready for you. It's not a bad strategy either. But as they continue to wander higher, it kind of weakens the seller's resolve. And we are closing in here now on the lunch hour, so that's going to play into it as well. The pleasure was all mine, Mark. All right, gang, I think we're going to button up shop here. If you're going to continue trading the rest of the day, well, this is the trading range you got to contend with right now. If you want to be more aggressive on it, look to buy when the market gets toward the bottom end. Look for selling opportunities when the market gets to the top end. Try to avoid it altogether while it's in the middle, because you're going to get some mixed signals and you could end up getting chopped out of the market. All right. Yeah, good day. Go finish up that Halloween candy that you didn't hand out last night. Talk to you tomorrow. Bye.